Hey, good morning. Here we are, back after a week's gap, because last Monday was Easter Monday, and I'm sure you didn't want to be listening to or watching me on an Easter Monday. You probably had more family-orientated things to do. So a few people pinging some message in there. Zach says, "Is Kevin on? Can't see him." Well, I probably wasn't when you messaged, but I am now. I was just getting me a cup of tea. There we are. There it is. And I'm not going to spill it today. So if you watched the video from a couple of weeks ago, I had a slight mishap with my tea. Unfortunately, just as I went live, so that was a bit a bit traumatic. But there we are. Good. So a few people saying hello. Some regulars there I can see already. Sunil, Zach, Rhiannon, Chris. Good. There we are. So, back with the Monday morning live Q&As at around 8:30. So what do we do here? If you the regulars will know, but if you're not a regular and you're tuning in for the first time, then what do we do here? Well, I've got over 20 years experience as a property finance broker, pretty much doing every type of finance that a property investor could need. So I answer questions, but of course I can't answer questions if you don't ask them. So it's a two-way street. You ping questions. We've got a couple of questions coming in there already. So you ping questions to me and I'll answer them. And I'll hang around for probably about 30 minutes or so. I'll do 8:30 till 9. The reality is that it tends to be a bit longer than that because people ask more questions, but that varies week to week. So you want to get a question answered on property finance, ping it in the chat box and I will get through. And if you ask it, I'm going to answer it. If it appears in the chat box, I sort of work through them methodically, very rarely miss one. And I'll hang around here till I answer them all. So I don't dive off at 8:30 and leave people's questions unanswered. I'll also pop them on screen, as you can see, as you will see, so that you can read the question as well as me reading it and just verbalizing it, because that helps people. And this is available on replays. So maybe if you're catching this live, brilliant. If you weren't able to catch this live, thanks for watching the replay. Just stick a hashtag replay in the comments so that I know you've watched it. Otherwise, I'll never know. And what we tend to find is people sometimes tend to stay on the whole thing. They'll join for a bit, then have to go off, go to work or whatever it might be. And sometimes people miss the start and catch the end. Well, whatever bit you miss, you can just log into wherever it's coming from, wherever you're watching it, whether it's in a Facebook page, Facebook group, or YouTube, and you can pick up the bits you missed. And I'll give you a link shortly where you can pick up previous weeks. So, because I've been doing this for over a year now, since the very first week of lockdown 1. So let's get cracking on the questions, because that's why people tune in. They want to get some questions answered. So here we go. So you'll see various bits of my face obscured depending on how big the question is, but I don't think that's a big issue, do you? So here we are. We're starting off with Rhiannon. Good to see you back, Rhiannon. Quick sip of tea. Go. Good morning. I'm planning on changing my residential mortgage to a buy-to-let. Okay. But also need to buy a car. If I take the car finance out first, will this affect my buy-to-let loan application? Well, not decisively, I would say, Rhiannon, but it certainly won't enhance it. So unless you've got an urgent need to buy a car, I'd probably get the mortgage done first and then buy the car. Yeah, because if you're going to take out car finance, that's going to go on your credit file. Now, that's not going to be the defining factor between you being granted a buy-to-let mortgage or being declined it. But it's going to be cleaner if you can defer the car purchase until after you've got your mortgage. And hey, we'd love to broker that mortgage for you. So if you'd like us to do that, just pop me a message. There's different ways to contact me, but probably the simplest way. I know you're coming in through YouTube, but I think you're on Facebook. So let me get you my Facebook page, Kevin Wright, Property Finance Expert. I check that inbox on a daily basis. So, and this goes for anyone else that wants to contact me. That is probably one of the easiest ways to directly contact me. So let me just pop that link in there right now. Just cutting and pasting it. So, boom, there we go. So that's now in the chat box. So whichever format you're watching this, whichever page, group, YouTube, whatever you're watching this from, you should see that. So there we are. Pretty simple there, Rhiannon. Thanks for your question. Aston's back. Yeah, Aston's on. Good to see you, Aston. Aston's on one of my mentorship programs for people that want to work closely with me. I take on a few people as mentors. And as not, I don't take them on as mentors. I take them on with me being the mentor. They do the mentoring with me, not the other way around. Didn't express that very well, did I? And Aston's working me at a closer level at the moment. Okay, so on a refurb bridge. Okay, so a refurb bridge, if you haven't watched one of these before and you're not quite sure what a refurb bridge, it's one of the 5 types of bridging. I've got a video on that. I'll pop you a link to that video in a minute once I've answered Aston's question. So a refurb bridge is one of the 5 types of bridging loans, and it's essentially where you borrow to buy the property and you borrow to refurb it as well, all in one loan. So typically you borrow 70 to 75% of the purchase price and then 100% of the refurb cost. So it's a pretty effective way of reducing the amount of cash you need to do a deal, because mostly you have to finance the refurb yourself as well. Right, so we're all on the same page now. We know what a refurb bridge is. Can you agree 2 different refurb options with the lender? One for a basic refurb and one if the planning is secured doing the project your own. Yeah, okay, so I get what you're doing here. So you're going to you want to buy a property with that needs a refurb doing, but you can also see there's an angle to increase the footprint of the property by applying for planning permission. Okay, so I think different refurb bridges, and there's not that many doing refurb bridges. No, there's not much more than a handful of bridges that would do a refurb bridge, but they would take a different view on that. Now, this is where our skill as brokers comes in, because if we know up front that that's what you want to do, then we'll be talking to the refurb bridging lenders and saying, hey, are you up for doing a 2-tier refurb, one with planning and one without planning? And my guess would be that some would say yes and some would say no. So this is just where giving your broker all the information at the outset means that they're going to get the best and most appropriate bridging terms for you. So yeah, and we'd be very happy to do that for you. I mean, we're going to be brokering this, Aston. So yeah, we can do that in the manner I've said. You tell us up front, which you will do, and we'll go to the different bridges and that do refurb bridges and say, hey, are you up for this? And the ones that say no, we'll just drop them. And the ones that say yes, we'll pick the best for you. That's what we do. Excellent. So thanks for your question. Moving on. Zach, another regular. Good to see you, Zach. You bought a house for 63,000. Okay, going to refurb and refinance. Will I have to pay conveyancing fees again when refinancing? Yes, quite simply, because mortgage lenders want a solicitor involved to do the conveyancing. Now, you might get there are a few mortgage products around that offer free conveyancing. Now, two things with that: it isn't free. They're not charging you for the conveyancing, but they'll be making that up with charging you an appropriately higher rate or arrangement fee. So you don't physically pay for the solicitor as you do normally, or the conveyancer, but you will pay. So yeah, there is, and also thing to be wary of about these free conveyancing, free legal fees, mortgage deals is they tend to be with bucket shop solicitors, and that are not always as efficient as they could be. So, but when you need that refinance, Zach, just get in touch, ping me a message, and we'd love to broker that for you. I've got to put this one up. Matthew Park says, "Hey, from Benidorm. Wow, hi. Good to see you tuning in from Spain. It's pretty sunny here today, but I bet it's more sunny, or at least a bit warmer where you are. But thanks for tuning in. Got a question? Ping it in the chat box. There we are. So, Rob Percy, there we are. Good to see you again, Rob. You've heard differing opinions on whether it's worthwhile to provide an evidence pack before or after photograph refurb order works to values. Okay, so for a refinance mortgage. So this is where, this is the buy, refurb, refinance concept. Buy a property, do something to it, tangible improvements to add value to the property, refinance it at the uplifted value, and pull out as much of your cash as you can. I mean, I've been teaching investors how to do this formally since 2013, and even before that. I call it recycle your cash. Other people call it momentum investing. It's also called buy, refurb, refinance, all the same thing. Okay, so your question is it worth putting a pack together to evidence the work that you've done, the tangible improvements that you've made since you bought it, to get a higher valuation? Okay, so some say it helps get a higher valuation. Some say valuers work on their own basis and they get irritated. Okay, well, it's a really good question, Rob. So let's drill down and look at this. Now, refinance down valuations are a fact of life. Rarely does a week go by when I don't see a post in one of the 100+ property Facebook groups that I'm a member of where someone's bitching about a refinance down valuation. You know, and I use a typical, when I'm talking about this, I use a typical scenario. You bought a property for 100, you spent 20,000 doing it up. You've got comparable evidence that other properties, either in the same street or the surrounding streets, have sold for 150. So you base your refinance mortgage application on 150 value. Now, it is possible that valuers could get irritated by this, but they're not irritated by the documentation you provide. They're irritated on the way that you want to present it to them, and I'll explain what I mean. So, is it better? Well, it is. So here's the point: are you going to get a worse valuation if you try and help the valuer? I would say you won't. You may get a better valuation. You may get a higher valuation. You may not, but you're certainly not going to get a lower valuation for trying to show the value of what you've done. Now, here's the importance of it, because mortgage lenders' valuers, and this is where a lot of investors misunderstand this. Mortgage lenders' values are not overly influenced on comparable values. So using that example I gave you, they're not overly interested in the fact that other properties like yours have sold already in the last few months for 150. They're more interested in the fact that you bought it for 100 and now you're claiming it's worth 50,000 more in a matter of months, usually weeks sometimes, but in a matter of months usually, and they need to justify to themselves how that 50,000 increase has occurred. Now, if you don't provide them any evidence, that's the main cause of refinance down valuations. Yeah. Now, what they get irritated with, Rob, is you holding them up, because these guys are busy, and they've got, I don't know, 3, 4, 5 valuations to do in a day. Then they'll go back and write them up. So what they don't want is you holding them up, trying to show them these documents. Look, I got this, and I got this, and I got this. Just give it to them. Just hand it over and say, look, I've got a few bits of information. You're probably wondering how I've added £50,000 to the value since I bought it, using my example. Look, here's some information. It's got some photos, got a schedule of works, got this, got that, whatever it is you put in there. I usually find this helps. So it's not the fact that you're providing that evidence. It's the fact of how you try and give it to them that they're going to get irritated about. So hope that helps, Rob. Got quite a few more questions coming in. Great. I've just seen Maddie. Oh, it's been rainy. Wouldn't you just know that, eh? You go to Benidorm, it still bloody rains. There we are. Well, thanks for tuning in anyway. There we are. So Rhiannon said, thank you. Aston says, perfect. Zach says, I bought cash. Yep, great, good. It's always good to buy cash if you can, because what does that mean? 0 borrowing costs. Can't moan at that, can you? So moving on. Andrew Coles, who's got a picture of, what's his name? I know that bloke. It's the thing from The Shining. See, this is what happens when you're live. Your brain goes. If you've ever watched a TV quiz show and you think, oh, what a muppet, don't you know the question, don't you know the answer to that question? That's so simple. It is when you're not actually live and doing it, but it'll come to me in a minute. I know him, of course. He's a very famous actor, isn't he? But there we are. That aside. And if I don't come up with it first, someone's got to stick it in the chat box. So there we are. Right, now, that aside, what's your question, Andrew? I have 2 buy-to-let properties owned between my wife and I in the process of buying a third. Okay. Is buying through a limited company advisable, even if my wife is a lower rate taxpayer? Okay. So this is a good question, Andrew, because, this is a question or variations of it that are asked, if not daily, then weekly, in Facebook chats. And, first of all, let me say, I am not an accountant. Okay. So if you want me to pontificate on tax advice, I'm not going to do it because I'm not qualified to do it. And I don't think anybody should talk about what they're not qualified to talk about. But I can give you some steers to which you can go to a qualified accountant with to get their advice. Okay. So the first thing is the first thing with limited companies are that it's going to cost you more money. So you're not going to save money without first spending more money. And let me explain what that is. Pretty much every accountant that I've spoke to has one charge for a set of sole trader accounts, or in your case, it's like a partnership accounts, isn't it? Yourself and your wife. But they have a different set of figures for limited company accounts, or a different charge for a limited company accounts. Why is that? Because it's more work. So the first thing you're going to find is your accountancy bill goes up. The second thing is that the rates that mortgage lenders charge for limited company mortgages are higher than in your personal name, whether it's single or joint. So your mortgage costs are going to increase when you go third party too, when you go limited too on your third or so. It doesn't matter whether it's your third or your fifth or whatever. So you've got to be saving enough money to get both to offset both of those additional costs before you even start to be better off. Now, the question is, how much are you going to save? And that is only an accountant that can answer that question for you. Because it's going to be individual to you and your wife. Okay. Now, you can also structure property ownership. There's two ways to structure owning a property with someone else like your wife. The normal way is joint tenants. So you jointly and severally own 100% of the property each. But there's another way to do it, and that's called tenants in common. Now, tenants in common allows you to say that each party owns a specific percentage of the property, as long as it adds up to 100%. Now, where you've got I don't know whether you're a higher rate taxpayer. I'm assuming you would be, because otherwise you wouldn't make reference to your wife being a lower rate taxpayer. So therefore, this is not advice. So don't follow this. I'm giving you information. There is no advice attached to it. I want to be absolutely clear on that. So the profits, the taxable profits on jointly owned property, it split 50-50. But if it's tenants in common, you could say, well, I own 20%, but my wife owns 80%, and she gets to pay tax on 80% of the profits, or any other percentage you want to, between 1 and 99%, whichever way you want to split it. So if you set it up as tenants in common, that's okay. Mortgage lenders don't mind which way it is. But of course, if you're doing it through, that's if you're doing it personally. If you're doing it through a limited company, you do that through the shares. So, you'd have 20% shares, your wife has 80% shares. So you can split the ownership and the tax liability that way. But the bottom line is that the third property you're going to buy, if you do it in a limited company name, your costs are going to go up, your accountancy fees are going to go up, and your mortgage costs are going to go up. So the amount of tax you would save, which your accountant would work out for you, has got to be more than enough to wipe out those extra costs, and to make it to give you an additional amount on top that makes it worthwhile. So no one can answer that. So you need two bits of advice here. You need to go to your accountant and get them to work out how much tax you're going to save, and you need to go to your mortgage broker and let them tell you how much additional mortgage costs you're going to incur. Because if you bought it in your joint personal names, you would get lower mortgage rates. Simple as that. Good. Okay. So let me scroll down and make sure I don't miss anyone. Jack Nicholson. I knew someone would do it. Yeah, I'm thinking Jack. Of course, it's Jack Nicholson. I'm an easy rider, one flew over the cuckoo's nest. What is it? A Few Good Men. You can't handle the truth. Of course, he's one of Hollywood's best-known actors, isn't he? See, it's what going live does to you. It fries your brain. So thanks for all the people that popped up with Jack Nicholson. There we are. Good. Okay, so we're hitting my optimal finish time, which is 9 o'clock. But I've still got questions to answer, so I'm going nowhere until I've answered them. So there we are. Scroll to answer. Okay. And we can take down Andrew's question now. We've got that. Oh, Rob very kindly says, great answer, best explanation I've heard on the subject. Well, I've been dealing with mortgage lenders, valuers for like 20 years, Rob, so I know a bit about how they think. In fact, I've walked many a mile in their shoes, and I actually teach the investors that come on my advanced training. I've got a whole module devoted to how to get the best refinance value. So I know this subject intimately. So I would hope it's a pretty good answer. Okay. So where are we? Good. So I'm going to have a go at pronouncing that, and so if I get it wrong, apologies. Guida. There we are. So Guida's got, and yes, you're the wife partner of one of the guys that I've been chatting to over the last week. So good to see you showing up, and good to see you asking the question. Thank you. If I buy a property with a tenant in situ and I need to do a full refurb, what do I do with the tenant, as I would like to keep him after refurb? Good question. So you presumably done some due diligence to find out that he's a good payer, pays on time every time, and he doesn't mess you about. Hopefully that's the case. So you want to keep him. Yeah. Okay. Yeah. So yes. Now, what's not really feasible is for the tenant to carry on living there while you're doing the refurb. You can't shuffle them around from room to room. So that's not really feasible. So where do they go? Well, at the moment, you're going to struggle with that. But here's what people have done in the past. They could go and live with family. Again, that's a bit difficult at the moment because of COVID restrictions. But hopefully after, if not May the 17th or June the 21st, that option could open up again. So they could go and stay with family. Now, some might have family to stay with, some might not. If they haven't, then you're going to have to put them up in a hotel. So previously what people have done is stuck them in paid for them to live in a travel lodge or a Premier Inn or something like that for that period of time. Okay. So we got, okay, so I'm not going to give any we got someone making some offensive posts here. So I'm just going to block them because we don't want people doing stuff like that on here. So thanks very much. Don't need you. Thanks. Okay, here we are. Guerrilla Investor. Thanks for showing up again. We know you're a regular popper-upper, if that's a word. Okay. Are commercial businesses valued on the yearly turnover or the net profit? Do the lenders look at the last 12 months of business history? This is about when the business owns the freehold. Yeah, okay. So if you're going to buy a commercial property, excuse me, if you're going to buy a commercial property, you can do two things with it. You can rent it out to a business that operates from it, or you can operate your own business from it. Those are the two things. So owner occupied or investment. Those are the two options if you're going to buy a commercial property. So let someone else use it or use it yourself. Now, if you let someone else use it, it's going to be valued as a multiple of the rental income that they pay to you for the opportunity to trade out of your premises. And those multiples are going to vary there's a multitude of reasons why they would vary. Whereabouts it is in the country, whereabouts it is in the town it's in, what type of tenant you got in there, what length of lease, and it goes on and on. Now, if you're going to put your own business in there, then what they're looking at is profit. Turnover means nothing. Turnover doesn't tell them, can you afford the monthly payments? So all they're interested in is your business profitable enough to afford the monthly payments for the mortgage that you're asking for? So it's profit, net profit is what they're looking for. Now, if your business is already operating, so it's a trading business already, then you will be trading out of some premises already. So if you're paying rent at the moment, then of course, if you've got your own building, then you wouldn't be paying rent to yourself. I mean, there's a way you can do that, but I mean that's just drilling down in too much detail. So whatever you're paying on rent at the moment will be added to your profits. So yeah, but it's definitely net profit. It's not turnover. Good. Okay. And you're back with another one. Also, is one year earnings were great and the year two bad due to COVID? How does that affect your valuations? Okay, they're not okay. So the business, so the premises don't get valued differently depending on your turnover or your profit. The amount that you get lent differs. So if your earnings are rubbish due to COVID, that's going to seriously diminish your ability to get a commercial mortgage. Yeah. Okay, there we are. So JCM's back. Oh, okay, right. That's just saying nice to bring it back after a 2-week hiatus. Yeah, well, as I said, if you're around at the beginning, you don't want to be doing this on Easter Monday, do you? Likewise, when we have the bank holidays in May, we've got one at the beginning and one at the end. I'm going to be skipping those as well. So there we are. So now's your question. Okay, but I'm glad you think it's nice that I'm back. So I'm currently in the process of an offer being accepted on a 2-bed, 2-bath, 2 living room property. Okay. Property is currently a 3-bed student let. 1 living room has been converted to a bedroom. Yeah, that's pretty standard. Okay. Now I'm a feeling there's more to come. So because you haven't asked a question, you just give me a statement. But I know that it's limited how much you can put into the chat boxes. So I'll wait to see if you put something else down and pick up your question later. Can you recommend a good tax advisor? Yeah, several. So if you just ping me a message in my property finance page, Kevin Wright, property finance expert, then you can tell me whereabouts in the country you are, and I'll give you the one that's probably the most convenient to you. Now, if you're enjoying this and you think, hey, this is pretty good, I'm actually restarting live in-person events 2 weeks from now, just under 2 weeks. So not this Saturday coming, but the Saturday after that, Saturday the 24th of April. I'm going to be launching a new event for this year, actually. It's called the Buy, Refurb, Refinance Summit. Guess what it's about? So if you're interested in finding out how to get good at pulling all your cash out of properties that you buy, and that does require a lot of discipline, actually. It's got to be the right property with the right potential, from the right seller at the right price. So if you want to learn more about that, come spend a day with me. This one's in 24th of April, is in Heathrow in London. It's £47 plus VAT for the day, includes parking, and I'll give you the best lunch I can in a COVID environment as well. So I'll feed you as well. So if London, you think, hey, well, I don't live anywhere near London. Well, I'll be doing some other ones in May, June and July in Leeds, Bristol and Birmingham. So I'm going to give you a link. You can go on there and A, find out more about it, and B, book yourself along if you want to come along. Now, let me find that for you. I'm just finding that. Got to stick that in the chat. Yeah, Buy, Refurb, Refinance Summit. So there'll be me teaching you and sharing with you some of the key parts to being successful at Buy, Refurb, Refinance. But I'm also going to have two extra speakers there. One is Martin Rapley, who is a project manager. So he's going to be giving you a presentation on how to cost effectively manage your project refurbs. And of course, if you're coming to a Buy, Refurb, Refinance Summit, that's pretty central to it, isn't it? We've got another speaker as well. I've got to rebook one because the guy that had lined up has had some family health issues at the moment, so he's having to sort of pull out for a while. But I'll have a second speaker on there as well. So yeah, Heathrow, 24th of April on a Saturday, not this Saturday, next Saturday. You've had to switch hotels as well because the hotel we had lined up has just been commandeered as a quarantine hotel. So, but times we live in, eh? Yeah, okay. So there we are. Good. Great. Just making sure I haven't missed anything. There we are. Stephen Shaw's next. Okay. Thanks for your question, Stephen. We're remortgaging soon. Our lender values our house at 205,000. Okay. The two independent estate agents value it at 260. What do we do regarding the loan to value? Okay. So there's an issue here, and it's the different angles that certain people use to value properties. So usually estate agents' values are higher than mortgage lenders' values, RICS valuers. Okay. So RICS valuers are being pragmatic, maybe cautious about what this could be sold for. Okay. Now, estate agents, by their nature, and this is not, I'm not denigrating estate agents, by the way, I'm just explaining how it usually is. So estate agents are giving you an opinion on what they could sell that property for. Now, given the nature of that when you ask an estate agent that, they're hoping that you're going to give them the instruction to do the sale, that naturally leads them to be a bit more optimistic about the sale. Because one thing we know, like most things in life, we're educated socially, culturally, to get 3 quotes on pretty much everything that we intend to buy. You know, whatever it might be, you know, anything to do with property, get 3 quotes. You want to get the roof done, get 3 quotes. You want to get your bathroom done, get 3 quotes. You know, so pretty much everything that you want to buy, that, you know, it's culturally ingrained in us that we need to get 3 quotes. So when you ask an agent how much is my property worth, they know that you're in all likelihood, almost certainly
going to be asking exactly the same question to 200 to two other not 200 not 200 two other agents. So therefore, their natural inclination is to be a bit optimistic, at least with the valuation they give you. Now, so that explains that differential why two estate agents are saying we could sell it for 260, because that's what they would try and do. They would put it up at 260 and see if they got any interest. And if they don't, they're going to say to you, Mr. Shaw, sorry, we really thought we could do this for you, but I think we're going to have to drop this to below 250 to achieve a sale. And that's what happens. That happens because all you've got to do is, every time you see a property where the asking price has been reduced, that's what's happened. So the mortgage lender's valuer is more cautious. Now, what should you do? Well, it's no good giving the mortgage lender's valuer or the mortgage lender or your broker the estate agent's 260,000 values, because that's not going to cut any ice for them. So the mortgage lender is not. So if you say to the mortgage lender, I don't agree with that valuation, can we do another one? They're most likely to say no. This is our valuer. We trust his expertise. That's what we're going to lend. So if you don't want to use them, you're going to have to use a different lender. Now, your broker, if you're using a broker, can find you the next best lender, because presumably he's found you the best lender for your circumstances. Why wouldn't he do that? So you're going to drop down to the next best lender, which is not quite such the deal that the first one is. And then you're going to take pot luck. You're going to have a lucky dip. So you're going to pay another valuation fee and then cross your fingers that it comes out higher. It might do. It might not. Now, your decision is, do you want to throw a few £100 in as a gamble to see if that's the case? You could say, well, can I challenge this 205,000 valuations? Yes, you can. You can challenge it and you can give them sold comparables. You've got probably about a 99% chance of failing at that, because now you're questioning their professional integrity and suggesting they can't value a property correctly. The only time that's going to work really is if they've made a monumental mistake. For example, you've got a 3-bedroom property and they valued it as a 2-bedroom property. Something like that. So reality is, suck it up and take the 205,000 valuation, or take a gamble on another lender who may or may not give you some. But if they give you, if one valuer is valued at 205, I would suggest that the next valuer they might value it a bit more than 205, but they're not going to value it anywhere near 260 or even 250. So you're not going to find that much level of deviation. So you put that down to, over-enthusiastic agents trying to get your business. Okay, because I guess you didn't say to the agent, I just want to waste a bit of your time. I'm not going to put it with you, and I'm not going to get you to sell the property, but can you tell me what it's worth? People don't tend to say that. You might have done. You might have been a very honest person, and you said it like it is. But most people, if they're asking an estate agent to value a property, they play along with that they might be wanting to get them to sell it for them. Yeah, and that's what leads to the prospect of them taking the instruction to sell your property leads them to give an over-enthusiastic valuation. So hope that helps. You've dropped your lifeless accountant for a switched-on bookkeeper. Good. Okay. Well, that's good. Okay. There we are. Ticker. There we are. Yeah, I've responded to a couple of your posts. I can't remember which Facebook group it's in. I'm so many, but there we are. Okay. So what's the advantage and disadvantage between further lending over refinance. Which one is a better option and why? Okay, right. What you're going to find with property finance ticket is that there is no best option. There are variables every time. There's nothing as reliable that you say, do this because this will work. And one of the reasons for that is because whether you're going on further lending or refinancing, you're relying on one person's opinion, and that's the valuer, the mortgage lender's valuer. Now, valuing is not a precise science. It's not an exact science. It's an opinion. It's an opinion from someone with a professional qualification. Royal Institute of Chartered Surveyors, RICS valuers. Now, you wouldn't do this because of the cost, but if you arrange for 5 valuations on your property, like Stephen just now, so he's paid for 1 valuation and it's come out at 205,000. If he paid for another 4, clearly he wouldn't, because it'd be a waste of money. But hypothetically, if he paid another 4 values to come out, you'd get another 4 different values, and probably none of them at 205,000. Some might be a little bit more, some be a little bit less, but they would be within a tolerance. You know, you're not going to get a £50,000 deviation from that. So because you can't predict what valuation you're going to get, it's difficult to say which one is a better option. But let's look at the principles behind it. So, you know, the answer is it depends. There is no better one or or the other. But let's look at the principles. So, mortgage. So you can get further lending is called a further advance. So you can apply for your existing lender to get a further advance. They won't consider it until they've seen you make 6 monthly payments since you started the mortgage on time every time. So they want to, even if you've got mortgages with them already, they just want to satisfy themselves that you're a good payer, good and regular payer, and that tends to be 6 monthly payments. So once you've made 6 monthly payments, you can apply for a further advance. Now, this would only be applicable if you'd added tangible improvements to the property. Okay. Now, the potential disadvantage of this, there are some advantages, but the potential disadvantage of this is that having already lent you money to buy it, there's an element of a reluctance to lend you. They might well give you some money, but they may not lend you as much as you would want them to. So the potential disadvantage with a further advance is you don't get as big a further advance as you want. The advantages, of course, excuse me. The advantages, of course, are that you've got none of the refinance costs. You haven't got. You may well have to pay a valuation fee because they're going to have to evidence that the property is worth more than it was when you bought it for. So you're going to have to pay a valuation fee. There's no solicitor's fees involved, and because you're not altering your existing mortgage, you're just taking out a bit more on top of that. There should be no arrangement fees, but also you won't get in most cases you won't be borrowing at the same rate as your original mortgage. You'll be paying the standard variable rate, which is usually higher. So there's the pros and cons. Now, if you refinance and with a new lender, then they're looking at it with fresh eyes. Now, you'd be doing all of this because you've added value. And so going back to what we're talking about earlier, you're going to need to prove to the value that you have added value. Now, so they're more likely to give you a higher valuation because they've had no involvement before. Now, of course, you can't be doing this if you've bought on a mortgage. So you can't buy on a mortgage and then refinance it a few months down the line. either before 6 months or after 6 months. Doesn't make any difference. Why is that? Because if that's what your intention is, your mortgage lender wouldn't give you a mortgage in the first place. They'd have kicked it out. Now, I'll give you I don't know whether you've seen this, Tika, but I'm going to give you a link to a video here that I've done where I explain that why you can't use, if you're going to do buy, refurb, refinance, you can't use mortgages to purchase. You have to purchase with cash or with a bridging loan. But I record these videos so I don't have to explain everything fully all the time. Let's pop this one up.
About why you should never be using mortgages if you're going to do a B.
Right, there we are. Pop that in there. So when we finished here, go and watch this video. That should be coming up in your chat box now. Okay. So hopefully you got an explanation that there's pros and cons with both. Good. Okay. So JC's, right, there we are. I knew there's going to be a question coming somewhere. Okay. So if you refurb this 2-bed, 2-bath, 2 living room that's currently rented as a 3-bed student let, if we refurb this as it currently is, will the valuer see this as a 3-bed property or a 2-bed property? Because the AST will show it's renting as a 3-bed. Okay. Most likely they'll see it as a 2-bed property, because what you've probably done, or what the current owner's probably done, is stuck a bed and a wardrobe and a, I don't know, computer desk maybe, bedroom furniture, let's put it this way, freestanding bedroom furniture in what was the lounge or dining room. Okay. Now, if you take the bedroom furniture back out again, it's a dining room again. So they're going to value it almost certainly as a 2-bed. Yeah. Good. Okay. Good question. But that's a good question. Okay. So Richard, here's another one. Richard's one of my on my top level mentorship group. So good to see you with the question, Richard. If I buy a property to refurb and let out as SA, serviced accommodation, i.e. Airbnb, for those people that are not familiar with the abbreviation SA, I don't like to use jargon unless I explain it, because I'm presuming that you know what it is, and you may or may not, depending on how experienced you are. Will any mortgage valuation be based as if it was a standard AST? Not sure if it's still the same, but some used to stipulate the rent had to be 125% of the mortgage payment. Okay, so I've done some videos on, first of all, why you can't use standard buy-to-let mortgages as a service accommodation, because you breach their terms and conditions, and which type of lenders that you can do service accommodation usage with, and there are 2 sorts. If you've got an established SA business, then there are professional, commercial lenders that would lend to you on the same basis they would lend to bed and breakfast and guest houses. And if you haven't, there's a few non-mainstream buy-to-let lenders that would underwrite it as an AST, but they allow you to do shorter term letting. And yes, the rent, the AST rent, they would disregard the fact you're gonna how much income you're going to get by using it as service accommodation, and they would just work it on 125% of the AST. So rent over mortgage to a degree of 25%. Yeah. Okay. So there we are. Good. Thank you. Got a few more questions. Don't want to miss anyone. Oh, blimey, we've still got a few more to go here. So I'm scrolling back up now, because when I click down, it sometimes lurches forward, and if I'm not careful, I could miss some. So there's quite a few more here. Right, there we are. Andrew says, great answer. Matthew says this is complicated. Not quite sure what you're talking about, which is complicated. But several things in property are complicated, aren't they? Okay, so Rob, to your previous answer to Andrew, why I buy okay, so I said to Andrew, buy-to-let mortgages are rated for higher for limited company and personal name. Okay, why is that? That's a fair question. The answer is because that's what lenders want to do. So when you're lending money, it's your money, so you can decide the terms you lend it out on and the rate you lend it out at. And mortgage lenders, pretty much across the board, have said, well, we want to charge more if you're going to borrow in a limited company name. Why? Because we can. So, it's really no more complex than that. Carlo, yes, good to see you. So Carlo's doing my advanced level training, the Ninja Investor program. He's been doing the digital version already, so he's been studying online. But I also do as also a 4-day event, and you're booked on the London course that I'm running in May, 20th to 23rd of May. So yeah. By the way, these in-person events, the Buy Refurb Refinance Summit and the Ninja Investor program, all COVID secure. So the hotels, and I've run some in-person events already. I've run them in the autumn. So, I know that we can run these safely. Seating is all socially distanced. There's a number of COVID protocols in place in hotels. So so hotels understand how to run events now. Okay, so yeah, looking forward to seeing you again. We'll spend 4 days together this time in May, in Heathrow. Yeah, looking forward to that. Okay, here's another of my people that have doing the advanced training. Danny's already done the event. He did the 3 days. It was 3 days last year. I've extended it to 4 days this year. It's not a question, but if anyone hasn't done the 1-day masterclass or the importantly the 4-day now Ninja Investor program, get it done. Danny did it, having the best time using everything I learned working. Yes, you've just bought a unmortgageable bungalow that no one wanted, which is what I teach people to do: buy stuff and buy the properties no one else wants to buy, and therefore buy them cheaper and add more exponential value. So yeah, you've got a great bungalow that you've been literally you started doing the ripping it apart last week. I've been watching the photographs you've been posting. And why did no one else want to buy this, but actually you saw? Because you were more adventurous in your thinking, and you saw beyond the obvious, and it's got a very big disadvantage to this property, and you've quite simply worked out a way that would completely eliminate this problem, the problem that other investors saw, other investors with less vision than you and your business partners saw, that put them off it. So by thinking out of the box is a bit of a cliche, but by lateral thinking and seeing the bigger picture, you've seen a way to make this into a desirable property. Yeah, and I think your ideas are great. I've been working with you on this, and I think you've got some great ideas there. Okay, so yep, there we are. Okay, Rhiannon's back with another question. Thank you. We're cracking on a bit today. We've still got a few more to do. So Rhiannon says, if I'm thinking of doing exchange with delay completion, okay, so that's put down your money to exchange, but instead of completing on the normal 28 days later, you extend that out for a variety of reasons. Okay, on a commercial property, at what stage do I need to show the estate agent proof of deposit? Okay. And how is it generally 10%? Okay, so estate agents want to usually see more than proof of deposit. They want to see proof of funds, so they want to see proof of the whole purchase price, not just the deposit. And it's 10% because when you exchange contracts in certainly British and Welsh law, contract law, property contract law, 10% is the forfeiture clause. Now, you don't have to put 10% down. It's one of the things I teach on the Ninja Investor program, that you can actually exchange on any sum you like, even £1, but you don't evade your forfeiture clause. And because once you exchange contracts, it's a binding contract. And if buyer or seller pulls out, they are obligated under that contract law to pay the injured party, if you want to put it that way, 10% of the purchase price, plus any additional losses incurred. So for ease, really, solicitors have always taken 10% deposit at point of exchange. They don't it's not mandatory, it's voluntary, but almost everyone does it. I teach people that you don't have to do that. So you'd want to show your proof of funds. Well, that depends, because what we're sometimes seeing now, Rhiannon, is estate agents not even letting you view the property before you've shown proof of funds. And there's specific reasons for that. But other than that, they'll often want to see proof of funds before the vendor accepts your offer, because otherwise they don't know whether you're legit or whether you're just flying a kite and looking for, which is what sources do, by the way. You know, they go and make offers on properties that they haven't got the money to buy, and then try and find a buyer for it in many cases. Yeah. So if that's not clear, then message me privately, Rhiannon, and I'll help you with that. Chris, good to see you again. So your niece and husband have a mortgage flat where they live. Can they get a buy-to-let mortgage on this if they rent it out? Possibly, yeah, they can. Now, they could also get what's called consent to let. So they could ask their current lender for their consent to rent it out. Now, if they're going to move somewhere else, are they going to, here's a couple of questions. Are they going to rent their new main residence, or are they going to buy it? So some lenders don't like you moving into rented accommodation, and they like you to be buying it. Some buy-to-let lenders are really picky, and they want both transactions to go through the same day. So as is often the case, it depends. But is it possible? Yes, it is. Yeah. Okay. Erica W says, hi. Hi, Erica. Maybe you've got a question. Harpreet says, see you on the Saturday the 24th. That's the Buy Refurb Refinance Summit. You're already booked. Fantastic, Harpreet. Looking forward to seeing you. Okay. So now, John, yeah, we've already, it says hi. Well, we already dealt with the question, so hi. Manny says, thank you for the links. No problem. Happy to do that. Actually, I've got another link for you. I've got my Facebook group, Recycling Cash for Property Investors. So while we're talking about links, let me give you a link to that. If you're not a member already, hey, come and join us. Why not? It's free. So here we are. Let's just cut and paste that. There we are. Yeah, you've got over 1,000 enthusiastic, ambitious property investors in that Recycling Cash group. If you're not in there, why not? Come along. Okay, Charles, thanks for your question. You've got a block of 3 flats, purchased 1 unit. Yep. I've created new leases. Is it best to refinance on 3 individual buy-to-lets so you can sell at different times in the future? Or is it easier to arrange one loan on the whole block? Well, it's easier to arrange one loan on the whole block. So that would, but you can't do that with standard buy-to-let lenders because they don't lend on multiple self-contained units. It's what brokers call an MUFB, multiple unit, blah, blah, blah. So these are specialist or commercial lenders. Okay. Now, if you you've created new leases, now hopefully you've done this correctly, and you've now separated out entities, because you can't be freeholder and leaseholder as well. They're two different entities. So you know, if you bought this in your personal name, the freehold now can't still be in your personal name if you've created 3 leases in your personal name too. And if you've bought it in a limited company name, you can't have created the 3 leases in the same limited company name. So you need to check you've done that right first of all, Charles. Now, secondly, you're going to hit problems with trying to get 3 buy-to-let mortgages on them. The first one is what's called overexposure rules. So all buy-to-let lenders have overexposure rules, which means they're not going to lend on a too big a percentage of the flats in a block. Now yours is obviously quite small, because it's not really a block, it's just a house converted into 3 flats. But what it means is that you're going to have to get 3 different buy-to-let lenders to lend, because no buy-to-let lender is going to lend on 2 of them on separate titles. You're also going to get an issue when with some buy-to-let lenders, when they see that actually that you directly or indirectly own both the freehold and all 3 leases, because what they're going to see that actually you're just owning the whole building, and that's counter to what they want to do. So you're going to find it a lot more messy to try and get 3 individual buy-to-let mortgages on, particularly if you've got all 3 leases in the same name. So if you're going to do that, you should have set up the leases in different names, which again, so it's complex. So it seems like you've gone part way down this road already. You didn't need to do that at all, actually. You just could have kept them all on one title, got a specialist or commercial mortgage, and if you at the actual point in time when you want to sell off a flat, you can just create the lease then. But it seems like you've already gone down that route, so a bit late to be telling you that. But if you need any more help, Charles, just get in touch, message me. Okay. So now just come back here. Okay, purchase price 150, deposit 40, market value 175, light reef, but converting 3-bed terrace to a 4-bed, reducing the size of the big bathroom. Okay, get what you're doing. Can I get bridging finance? Okay, good that you're doing this on a bridging finance and not trying to do it on a mortgage. That's good. Can you get bridging finance? Absolutely, you can. You can. And we've done loads and loads of these types of bridging loans. So you could get a refurb bridge, which is 70 or 75% of the purchase price. Plus you could get all refurb money. Don't say how much the refurb money is, but you get 100% of that. Or you could just get it a purchase bridge based on the 150 purchase price. Or possibly you can get a market value bridge where you get 70 to 75% of the market value of 175, 180. Now, as brokers, what we do is we work out the best option. Now, I said I was going to do this before and I forgot, actually. So I'm going to give you a link to this video now, which is the 5 types of bridging. Just got to find it. So bear with me by look for that. As always, when you're looking for something, it's not the you can't see the wood for the trees. 5 types of bridging. 5 types of bridging. Dear. I'm gonna have to. Oh, we've got it. I'm gonna say I have to find it later. I just found it. So what is it this week? See, I've got on my YouTube channel. I've got now over 100 videos, so that's why it takes a bit longer to find them. There's a lot to research. Okay, so Navjot, you might find this helpful. 5 types of bridging. So go and check that out. But yeah, ping me a message, Navjot, and we'd be very happy to broker that bridging for you. Stephen says, cheers. Jason, good to see you. There we are. Jason was on my live stream property finance masterclass. That's the sort of sister event to the buy, refurb, refinance that I've been running during lockdowns. We own a beauty salon spa business, trading almost 25 years. We own the property that we trade from. Good, nice setup. We're looking to sell the business and the property. Business opens today. Good, gives a good return. But you're looking to wind down and retire. Fair enough. Are there companies that you would recommend that would value the business and the property either as a package or sell the business and rent the property from us? Okay. Well, if you're looking to sell the business and the property, then what you're looking for is buyers, not now those buyers could be individuals or companies. Now, buyers might not have the ability to buy the property, but they might have the ability to buy the business. Hopefully what you've got is you've got the setup so that your business rents the property from you as the owners, because that's basic accounting advice, is you separate out the ownership of the business and the property, so that the property should not be an asset of the business. It should be an asset of either yourself personally or limited company, and hopefully you got the right advice to set that up. But if you set up a lease, then you can just sell the lease if you want to. So that's generally a good idea, is you should have an opportunity to sell the lease of the business. Therefore, if someone hasn't got the ability to buy the property, but they can afford to buy the lease, then at least you can sell that, and then you can just sell the property separately as an investment with a tenant, giving a yield. So that's quite attractive to certain investors. And if you've got someone that wants to buy, if you've set up the lease and you've got someone that wants to buy the whole thing, well, they can buy the whole thing anyway and just cancel the lease and just put their own business in there. Now, what I was saying to you about owner-occupied commercial properties or investment commercial properties relates to you. So I think this is something we're probably going to benefit from having a chat about, Jason. So I know we've swapped some emails and messages and that sort of thing. So, I would say let's get on the phone and have a chat about this, and I can give you some guidance. But thanks for your question. Have we got any more, or are we there? No, we've still got some more. Okay, it's turning into a bit of a long session today. So if you've got to jump off, that's okay. Come back, watch the replay. Sticky Fingers. what a lovely name. When doing buy, refurb, refinance, is it advantageous to get the revaluation done after you tenanted the property? Not really. What you must do is get it valued after you've done the refurb. If it's a standard single AST, it's not going to get a different valuation whether it's got a tenant or whether it hasn't, so it doesn't really matter. Thanks for your question. Chris, are mortgage and remortgage and development finance brokers the same? No, absolutely not. Mortgage brokers tend to be good in varying degrees at mortgages. It doesn't really matter whether it's a purchase mortgage or a refinance mortgage, but if it's a single buy to let, most mortgage brokers are competent at that. If you're wanting complex mortgages, so HMOs, serviced accommodation, commercial, semi-commercial, all that type of thing, then your choices shrink down, because a lot of brokers aren't sufficiently experienced at that. And I would say you for any more property, any finance that you want on a mortgage, you should deal with a broker that does it on a daily basis. Otherwise, they're going to be a bit out of touch. Okay, so most mortgage brokers deal with main residence and single AST buy-to-let mortgages on a daily basis. Actually, some of them don't even just do the main residence. They don't do buy-to-lets that often. But if you're getting anything complex, you want to be doing that. Now, development finance is a completely different thing altogether. Now, mortgages, we have brokers, we have software that we lease that allow us to do best buy tables, a bit like moneysupermarket.com, but a bit more enabled than that. So essentially a mortgage broker, if you say, I want a remortgage, I want a 5-year fixed rate or whatever it is, they punch in the details, up comes the best buy of the top few dozen. Mortgage is very simple. Development finance, very, very different, and bridging, because there are no best buy software really around. It's purely experience. So you need, if you want to be doing development finance or bridging, you need to be restricting yourself, if you want to get it done right, to be talking to brokers that do bridging and development on a daily basis, and we're one of those. So if you want that sort of stuff, get in touch. Manny, there we are. Good question. Good to see your question. That's about finished my tea at last. Now bring me water over. Okay, so you won't be able to see me here, but I'm still here. If you're tied in with your mortgage lender for a fixed period, and the meanwhile property increases in value, is it possible to have them to revalue the property again to reduce the loan to value, even though you've got 4 years left of yes, but yes, you can pay them to revalue the property, but no, it won't affect the fixed rate you're in, because that's what you've got a fixed rate. So now conversely, you wouldn't, if that worked, you wouldn't like the other side of that. You wouldn't like them to come out and say, hey, we're in a bit of a property crash, we need to come and revalue your property. Oh dear, your loan to value's gone up, we're gonna have to charge you more money. You say, oh well, hold on a minute, that's why I took a fixed rate out, so that I could budget on that. So the answer is no, for both reasons. Yeah, and if you try and alter that, even if you stay with the same lender, you're going to have to pay the early redemption penalties. So that's going to cost you way more money than it's worth doing. So there's that saying, you made your bed, now you got to lie in it. Well, that's what you do when you take a fixed rate mortgage deal, Manny. You make your bed and you have to lie in it. And if you try and wriggle out of it for any reason within the fixed period, you pay the redemption penalty. Now there is that. I'm not going to get into this, but you can pull it on to a new mortgage within a few months, but you still pay it and get it back. Okay, JC's back with a bit more information about this property. Downstairs living room was converted to a bedroom by fitting a stub wall with a door. Yeah. Possibly, okay, so you've made it into a third bedroom, but a valuer might just say now you've got 2 reception rooms. So that's not clear cut either. Okay, so we talk fairly regularly, so I know that the name you use is Alex. I'm going to use that because it's easier than your own. Sorry about that. I am well. If someone has an interest-only residential mortgage with Lloyd's on a 10-year term and the term expires now. Second part of the question. Can Lloyd's call in the mortgage, although the borrower has never missed payments and can't remortgage due to furlough? Yes, if they choose to. Yeah, they'd be a bit harsh if they did, but yes. So you take out a 10-year mortgage on the condition that at the end of the 10 years you give them the money back. That's the deal. Now, particularly, I don't know. You didn't say if it's their main residence or not. So what could you do? You could ask them to switch you to you could ask lawyers to give you a new mortgage term, to grant you a new mortgage. And you could ask to put it on to repayment. But they are going to give you months of grace. They're not going to just jump in and call the mortgage in if it's only just retired. And if you explain to them the situation, it probably isn't you, it's someone you know. But you explain the situation to say, look, can you just roll it on for a few months while I try and sort this out? Most of the time they're agreeable to that. But can they call the mortgage in? Yes, they can, because your term has expired. Oh, we've got another one there. Or can Lloyds do nothing while the borrower keeps paying and wants to? No, that's not an option, because if that was an option, what's the point of having a 10-year mortgage? You might well say, have a mortgage, keep it as long as you like, we don't care. And that's not what they're saying. So the best they're going to do is to give a stay of execution to the borrower to allow them time to sort out a resolution to their situation. But no, they're not going to agree to carry on indefinitely. They will eventually call the mortgage in. So your choices are, or this person's choices are, see if Lloyds will give you a new mortgage, create a new mortgage term, sell the property, or refinance it with a different lender when they're able to refinance. Those are the options. Continuing indefinitely is not an option. Matt said, I didn't have consent to let my home out, but did it anyway. Could there be consequences? Yeah, because you've done something the lender didn't agree to doing. So the best thing you can do is to ask the lender for consent to let. So just get onto them and say, I'd like to rent my property out. Can you give me consent to let? So the best thing you can do is to rectify that oversight. Chris says, source of deposit would be from the sale of a commercial property of the same use class. Yep, that's okay. Let's just check back on what that question was, Chris. Yeah. Selling a property, doesn't matter whether it's commercial or not, doesn't matter if it's the same use class or not, doesn't make any difference. But selling a property and releasing your own money is acceptable deposits. Good. Are we there? Almost. Zoabe, there we are. You bought a flat at auction. It was given nil value by a valuer due to no central heating, and work required to bring it up to date. Yep, that's pretty much what auction properties are. Otherwise, why would they go in auction? If you got a perfectly mortgageable property, why would you stick it in auction? Just set it through an agent, wouldn't you? Can I do with work between exchange and completion on a bridge? Okay, so Zoe, I don't know how experienced you are, but if you're trying to do an auction property on a mortgage, that's a recipe for disaster. That's pretty much going to end one way. You lose your deposit because you can't complete. You've got most cases 28 days to complete the transaction. You're never going to do that on a mortgage. Certainly not post-COVID. It was challenging enough before COVID, but lenders are working slower, solicitors are working slower. That's not going to work. Can you do the work with the exchange and completion? Almost certainly not. Almost certainly the lenders, the seller is not going to give you permission to do that. But can you do it on a bridge? Yes. So what you need to be doing, and you need to be doing this quickly, and we're happy to help you. So let's get in touch. So Eben, and we need to be quick, because if you've agreed to buy a flat at auction, your clock is ticking on a daily basis. So we need to be jumping on this sooner rather than later to avoid you losing your deposit. So we need to arrange a bridging loan so you can complete the purchase. Then you can do the central heating and whatever other works required, and then we'll put it on a mortgage for you. But the lesson here for you and anyone else is don't be looking to buy properties at auction and finance it with a mortgage. One, mortgage lenders can't, almost without exception, can't work in a 28-day time frame. Two, the basis of mortgages are it's ready to rent, and you're highly unlikely to buy a property at auction in a ready to rent state. So it's not going to work for those reasons. But yeah, let's touch base. We'll help you with this. Okay. Brad, good to see you. Booked on your BR, of course. Great. I don't know which one you booked on, but I'll see you at whichever date. Be nice to meet you, Brad. We've been swapping messages over the last week and helping you out with a bridging loan right now. So that's good. Navjot said, thanks very much. Jason said, thanks very much. Sunil said you got 10 minutes before Homes Under the Hammer starts. That was at 9:50. So Homes Under the Hammer starts now. Okay. So if you want a good bit of entertainment on what not to do at auction, in most cases, Homes Under the Hammer provides it. Okay. So Alex says, yeah, it's their main residence. Yeah. If you need any help on that, well, I mean, we're emailing each other anyway, Alex. So just email me and we'll see if you help. Okay. Matthew said already spoke and they wouldn't give you consent or change to buy-to-let mortgage. Right. You need to switch lenders then, Matthew. You need to switch lenders, get a buy-to-let mortgage and pay them back. If they won't give you consent to lend and you don't want to, you do want to carry on renting it out, you've got to switch to a buy-to-let mortgage. Give us let's get in touch, message me and we'll arrange that buy-to-let mortgage for you. Very happy to. Brad says, Birmingham. Great. Birmingham. Well, guys, we seem to be at the end. That's probably got to be my longest broadcast to date. But I said I'd stay here until I do. Oh, there we go. So it's now 10 o'clock. Hour and a half. Wow. But thanks for all your questions. I wouldn't have been here without your questions. I'd have been gone ages ago. Charles has popped in with another one. Is bridging based on your income? No, it's not. It's nothing to do with your income. Bridgers aren't interested in your income. They're not interested in how much you earn, how little you earn, or if you earn. Is it or security on another property? No, it's not based on security on another property. It is just on the value of property being purchased. Yep, that's exactly what it is. Just on the property being purchased. So bridgers are far more relaxed about lending to you than mortgage lenders are, Charles. Again, if you want to want us to broker that for you, let's get in touch. Happy to do that for you. Tika says, love your Monday mornings. Great. I'm glad you do. What a lovely way to start the week. Can you please tell me about Ninja Investor Program? When is the live one? Okay, so I've got 4 live ones coming up in May, June, and July. So I'll touch base with you, Tika, and we can take that conversation forward. Rihanna said, thank you so much. Always very helpful. You're welcome. Thanks for keep showing up, Rihanna. Now, without people like you, I'd have a very short Q&A, wouldn't I? Before you go, my terms of bridge have changed slightly. I'll fire it across to you in an email now. Okay, great. All right, do that. Charles says, thanks. Good. Okay, so thanks for all the time. If you've watched the replay, then thanks for that. Just put hashtag replay in there. Whether you watched it all the replay or part of the replay, or you just caught the bit that you didn't get live, whatever that is, thanks very much. I'll be back next Monday, 8:30, to do another property finance Q&A, and I'd love you to tune in. So have a fabulous week. Enjoy our newfound freedoms as we in England, if you're watching in England, Wales and Scotland and Northern Ireland are different, and Benidorm is certainly different again. But this is April the 12th, and it's stage 2 of the lockdown. Restrictions easing, so enjoy your additional freedoms that you can do from today, and I'll see you next week. Have a fantastic week.